Colin and Sam here with your July market update. So, going to run through the numbers, kind of review what's going on in the market, and try to project what's to come. So, we're going to start off looking at new listings. So, new listing wise, we had 61 last month for the month of June that came to the market. Historically, looking back, June's usually a pretty busy month for new listings. So it is, 17 less than the previous year, 10 less than the year before that. So a few less coming to the market. The biggest thing to talk about is our actives. So our actives have jumped up, the highest it's been really since COVID. So COVID happened here. They dropped like a rock, for the rest of the year. Basically, everything got gobbled up. Interest rates dropped. And then we saw 2 years where we're averaging 70 houses on the market. We look back at these 2 years, we were averaging 180 houses on the market. So that's, 3 years pre-COVID, 2 years post-COVID. And so we're seeing maybe getting back up to, we're at over 100 for the first time, like I said, since COVID. So interest rates were right about here, July, August. About a year ago is when interest rates went from, we have it here, average interest rates, they were twos and threes, around that COVID time. And then boom, they spiked up to 7 right in that June, July, August, September. So we're just hitting a year. I would say we're finally getting to where there was so much pumped up demand. There was multiple offers, crazy, over those, 20, 21, 22, free money basically. And now the people, it's kind of maybe running out. Maybe the markets, that's the reason they did it, right? Is raise interest rates to get us back to a normal market. So we're still, 60 active listings from a quote unquote normal market. So I would expect to continue to grow, probably the amount of active inventory. What that means, selling, it's the absorption rate. As it takes longer for a house to sell, typically that means the prices are impacted. I don't foresee, I'm not on a crystal ball, like prices dropping off by any means, just because they're kind of set at a price. It's not going to drop down to 2017 prices or anything like that, but I could see it. It's already softened quite a bit. Just there's not as many multiple offers driving the prices up. So I think we're getting to a leveling off and a calming of the market. So I would picture us having the rest of this year probably climbing, maybe not drastically, but continuing to climb, and prices, buyers having a little more negotiation power, sellers having to be a little more flexible on selling terms. So that's my crystal ball. I'll hand it over to Sam to see what he has to say.
Yeah, so kind of jumping off Colin's points there, I'd probably kind of reiterate some of the points he made, where it doesn't seem like the market is, going to get back to what we saw previous to COVID anytime soon. I think properties are still moving fairly fast. You might see days on market increase from where we had multiple offers, like he said previously, to where, stuff's going to start sitting for a few months or a few weeks, maybe even a couple months, but that's still not a relatively long time in the grand scheme of things. As for if you're a buyer out there, you're definitely going to have more options, depending on what price point you're looking at. If you're in a lower price point, under 300, if you're looking for kind of a turnkey property, that's still going to be difficult to find if those are priced well. Anything over kind of that 450 mark, we did a search again this month in Ames, and there's 38 properties on the market out of, I think, 90. So about half of those listings are above 450. So if you're a buyer in one of those price points, you're going to have options and stuff's going to be sitting on the market. If you're a seller, depending on what price point you're at, you're going to have to get a little more competitive. If that's staging your house, if that's getting competitive on price, doing a few more updates, whatever that looks like, to make sure well-qualified buyers are getting into your house and looking at your house first that would be one of the major driving points there with added listings on the market. Kind of sounds like interest rates are going to stay the same going forward, especially in election year. Kind of depends on what happens all in January, but yeah, I foresee kind of the same thing. July, I think we're going to have kind of similar to what we've seen previous years on sold inventory. I think this number on active listings is going to be the biggest takeaway. I'm going to be curious to what that is at the end of July here. If it keeps increasing by this amount, by 22 or so, or more than that, yeah, 22, 30 listings next month, I think the market's definitely going to pull back a little bit. I could foresee it, we getting some inventory off the market too, because it was pretty nice here July 4th, people getting their trips in and stuff. So if you're looking to buy, sell, rent, the FET team's here for you. Thanks for watching. Bye.